Okay, let's take a broad look at the commodities market, get some ideas for the week ahead. Bill Baruch, president of Blue Line Futures, joins us. Bill, thanks very much for coming on the show. Could you start off by talking about air travel and oil? Or air travel coming back pretty decisively in the United States anyway, bullish for crude, presumably.
Absolutely. That is something that's we expect to be a tailwind to crude prices through the summer. In fact, I mean, on our wealth management side, we're heavily positioned in several stocks to capture that. I own Southwest, I own Spirit, and I own Expedia. But as for crude, I've been very bullish for a long time, and I think $100 is in the cards over the next 18 months or so. But in your near term, I do think $70, we're going to get above there. On a technical basis, just right here, right now, I think that 66.50 or so has been a very big level for us, even the first time up there in March. And I think we're trying to chew through it. China demand is something that is a little bit in question, and that's been a big bellwether for the market over the past year. And are they going to continue to keep pace with the previous demand? Now, you can see some of the numbers last night that came out in China from industrial production, fixed asset investment. They were good numbers. I mean, good year-over-year results, but not the sort of enthusiasm, not the sort of big, huge numbers we were seeing in the fourth quarter. So I think, as you know, answer your question a little more specifically, looking at U.S. air travel, reopenings are happening, the mask mandates getting dropped. People want to travel. That's why I own those stocks I mentioned. But I think that's going to bring into the demand landscape for crude oil. And I really like crude oil in the back half of the year.
Gold. You have some interesting thoughts on gold, that gold could be about to send a strong technical signal that the downdraft in precious metals is over. Just walk us through that.
Well, we've been saying the overall sell-off, the repair of the damage that was set forth through February and March in gold has been repaired, for a few weeks now. When it got above 1770, then it was that chop around between 1770 and 1820 or so was really repairing that damage. The steadfast ability to stay above 1800 is telling us that the bulls are back in the driver's seat. And today we are breaking out above a downtrend line. Going back to those highs last August. This is now a bull market. The downtrend overall is now over, and this is a tailwind here. 1895 we think is in the cards really very soon. 1900 area obviously is big psychological area. Silver has had a much better, though the range on a percentage basis much wider. That is how silver trades, of course, but silver's had a really great technical landscape, and you have both the base and precious metal tailwinds that could help that. Copper's been very strong. We like the precious metals. Keep an eye on the dollar. Keep an eye on the Chinese yuan. The Chinese yuan is hitting a big trend line against the dollar going back to 2014. That's really the only foreseeable headwind. That and treasury yields. The treasury yields, very stable landscape over the past couple weeks. That has been helped bring a bid to gold as it's been repairing that damage.
We've only 30 seconds, Bill. Give us one commodities trade for the week ahead.
That's tough. I think if equities get some weakness here, that could be a really good buying opportunity. One more pullback, chopping around here through the end of the month, and then look for a strong start to June. But gold, we close above here on a weekly basis. That's going to stay above there. I would be playing that in silver. So getting in the nitty gritty, silver call options, call premium starting to pick up here today. Sure. I wouldn't chase it. Work a bid and some call spreads. You get 29.31 call spread going out to August. And silver could be about 40 cents, $2 grand. That is how I would play this breakout in the metals.